And we are live. We're gonna give this a couple minutes for people to get the notification, start joining the stream, but welcome. My name's Nick, and I'm really glad you guys are joining tonight. I know the NBA playoffs are on, so I'm really competing with prime time here, but today should be about 30 minutes, maybe 45, depending on how good the conversations are, how much I have to say. So yeah, we'll go from there, but it's Friday. We'll give you a minute, go grab a drink. I've already had one to relax. This is the first live stream that I've done, so we might make a couple mistakes, but we'll be fine. So let's see. Got a couple people on already. So do me a favor while I'm getting comfortable with this. Go ahead and comment something so I can see who's all here and where you saw Stock Tricks, how you got to this channel. If you're one of my good friends watching for support, just say like Stock Twits so no one thinks that all the viewers are just my friends right now. All right, I think we're on about a 15-second delay, so I guess we'll get started in about a minute here, but how's everyone's weekends or weeks? Get through it all right? Stay at home? Let's test this out. Hey guys. How's the week? Are you guys up on the week? Down? Are you all stock traders? How'd the week go for you guys? Hey Kapil. Ken Hoffman 33, Dan Robles. Thanks for joining the chat. I just got it up on my screen. And you guys can see the screen I'm sharing just fine, right? It's showing up fine on my screen, but want to make sure you guys can see it. No profits, no loss. There we go. Yeah, today I made a whopping $2, so I'm right there with you. All right, so we're about 2 minutes in, so I think this might be what we get for now. So let's just jump back to this other camera here. All right, so like I said before, welcome to Stock Tricks with Nick. If you were a subscriber before and hung in there for the last 3 months when I wasn't making videos, thank you for doing so. Work got crazy, there's a pandemic going on, and I did take some time to reevaluate how I was trading in the past. Before, a lot of the videos that I did was with options. Since then, I took a step back, wanted to reassess the risks that I was taking while trading, using those strategies. I've since switched to trading just stocks, and I've done a lot more consistent. So the great days aren't as great, the bad days are way less bad. And while I'm not a full-time professional trader, that's exactly what I'm looking for. So anyone new to the stream, thank you for joining. The goal of Stock Tricks with Nick is we're gonna be doing these live streams Friday, 7 p.m., at least during the pandemic. I know Friday is kind of a tough time because everyone's out there celebrating the money they made in the stock market usually, but with the pandemic, I mean, you're probably just sitting at home watching this, so once that gets over, we might push this to Sunday. We'll play around with that. But so live streams on Friday, we'll go over just the market in general, the stocks that I traded, some P&L, on my side, some mistakes. I love sharing my mistakes with you guys so you don't make the same ones. one thing about my channel is I'm going to be completely honest with you guys, how much I make, how much I lose, because in the end, it doesn't matter. Like, I want to be the best trader that I can be, and I'm not going to be able to get to that level if I'm not looking in the mirror and actually evaluating myself. So I'm going to put out the trades that I made to you guys. You guys can comment, give me some good advice. I can give you some advice, and we'll go from there. Outside of the live streams on Friday, well, I guess really quick, after the live stream each Friday, I'll be posting the videos to my YouTube channel. So if you can't watch it on Friday, you can come on Saturday, Sunday, whatever, and watch the video. I'll go through and timestamp anytime I talk about a specific stock, so you guys won't miss out on anything. You can kind of skip through some of the beginning, just talking points. Outside of the stock videos, I do plan on making just personal finance videos as well each week. That's going to take about a month to start up because I want to edit those. And with the live stream, it's great because it's interactive. I could talk to you. There's very little editing. But I do want the personal finance videos to have a little bit nicer of a touch, kind of what I was doing beforehand. So I'm building up ideas for those right now. Always want to talk about how to save money, credit cards, how to, what credit score means to you, how to improve your credit score. And basically, what personal finance is one of my passions. I think it's an area of study that I never learned in school, and I went to a really good elementary, high school, even in college. I majored in actuarial science and finance, so I got it there, but personal finance is something that affects every single person. So if I can make a couple videos to help some people save money, not get into debt when they don't need to be, that'd be great. So those should be going out on Wednesdays, but again, that'll be in about a month from now. So let me just hop back to the other screen so I can see the comments here. What do we got going? All right, where is Lou? Lou is not here today. I haven't seen that dog in a while. All right, let's go through here. All right, so let's talk stocks. The first stock that I wanted to talk about, of course, is Tesla. So they announced a stock split on August 11th, which is this last red day before the dip here. I guess before I jump to that, I trade on E-Trade. That's this platform here, and on this screen below, I show what each of the channels or metrics are. So we got the Bollinger Bands, which is just 2 standard deviations away from the 20-day simple moving average, which is this green line here. The red line is the 50-day simple moving average. Yellow line, 200-day simple moving average. And the one that I probably use the most is this purple 8-day exponential moving average. So I'm more of a short to midterm trader, and I'm always trading with the trend. And this 8-day moving average is something that I really like to depend on. Outside of that, we have volume down here with the 50-day moving average here. So if we're seeing a lot of buying volume coming over this 50-day moving average, that's a sign that I like to look when I'm getting long in a stock. If volume's drying up while a stock is spiked and then it's starting to pull back, if less people are trading that stock, that's a good sign. So I like to keep those metrics out here. And then just price relativity compared to the S&P 500. So I always want to be going long stocks that are relatively strong compared to the market. Winners tend to keep winning, and losers tend to keep losing. So looking for strong price relativity as I'm going along, and looking for weak relativity as I go short. Let's see. Tesla to the moon. Tesla has been going to the moon. So let me jump back to my notes here. So yeah, on August 11th, Tesla announced a 5-for-1 stock split. So what that means is if you had 1 share of Tesla and you held it through the 21st today, on August 28th, you'll then get 5 shares. But it's not going to be 5 shares at the $2,000 $2,050 price it is now, the price does get cut into 5 pieces. So there's actually no change in your market cap or your value of the shares. It's just they want to split the stock so it becomes more affordable to more investors. And with that being said, if there's no change in actual value to the company, the stock shouldn't rise, should it? No, it shouldn't. It's the same exact value. That's not what happened with Tesla. And that's not what happened with Apple too. We'll get to that in a second. But you saw Tesla come up here. If I zoom out to the year, it's obviously been on a monster run. And I've been trading it this entire time. Green flags are buys, red flags are sells. Sometimes I'm not afraid to short Tesla, but you definitely have to keep a tight stop loss or you will lose big there. So back to on the 11th, they announced that stock split. That broke this little consolidation that we saw. So we saw this spike up. Let's see, can I get, no, not horizontal, sorry about that. I'm going to switch to measure here, and then when I do measure and you see this segment piece, it'll show you how many percent up or down the move is right here, just to call that out. So let me erase a couple of those. With this move, we had it move all the way up. So a 90% move from this base, you saw a buying volume heavy, a good sell sign here, but then it just consolidated, moved sideways, sideways, sideways. And I was actually short coming in to the last day before the stock split here. So I shorted once with the break that I thought, okay, now we're breaking down. We're going to be going back to that base. Shorted one share there, shorted another share just as I wanted to add to my position because this wasn't breaking onto the upside. And I sold one for profit when it broke down. That was a great sell for me. It broke down to this base over here. You can see there's some support there. So I was like, all right, let's at least cut half. Let's move my stop loss to my entry position so I can guarantee a winning trade. And a winning trade on a Tesla short is very rare. So I was happy with that. And then, of course, the next day I get stopped out of my short, but then I hop in long because I knew this was going to start breaking hard in one way or the other. And when buyers came in, that 5-for-1 split, this market being kind of ridiculous, I had I figured that it would start going up again. So I just bought one share here and sold it when we got this red candle outside of the upper Bollinger Band. Typically, that's a sign that the stock is losing a little bit of the steam. And of course, we did the next day, saw a little consolidation. So I was like, all right, I made the right move. And then Thursday and Friday just took off again. So again, this started from a stock split that has no effect on the actual value of the stock, but the markets can be irrational. And what you need to know is what the price is doing. You can't think rationally and be a good trader all the time. You need to pick your high probability setups, put your stop losses in, always manage your risk on the downside, and then just let the stock play out. Let me see some comments. Is it too late to buy, or would you recommend waiting until after the stock split? So personally, one of my rules is that I'll never buy a breakout 10% above the breakout point. So we got this break up here, consolidated, and I will ignore this for now, but as this is consolidating, if I had missed the entry on this by 10%, so that's right there, if I was already that far away from the base, I'm gonna miss the trade. Traders miss trades all the time, but you can really get burned by chasing trades. Not so often in this historic bull run after what we've seen from COVID, but it's always good to manage your risk. There's always going to be good setups out there. If you miss this one, get on to the next one. Add this to your watch list, see if it can pull back, create a new base, and then you can set up a trade from there. Good question, Dan. Next stock I wanted to talk about was Apple. that was another case of the stock split being announced on July 30th. So let's find that date here. Oh, it was the earnings date, my bad. So between earnings and the stock split, this gapped up and we saw it just drift higher, come back to the 8-day exponential moving average. You saw buying volume high, selling volume, this one red candle, low compared to the other buying volumes. And as long as it stays over the 8-day exponential moving average, the trend is still intact, goes higher. On Wednesday, it broke $2 trillion for market cap. And when I say market cap, because I'm not sure who's watching the stream, what level of trading that you're at, but market cap is just the outstanding shares times the share price. So basically what the company is worth. So just because Apple has a smaller price than Tesla, so Apple's 500, Tesla's 2050, doesn't mean that Apple's value is less as a company. It's just there's way, way, way more Apple shares out there than Tesla. So Apple hits $2 trillion in market cap, stays above this 8-day exponential moving average. We see selling volume less than the buying volume, shrink up again as it consolidates, moves sideways, breaks over this little barrier here on Thursday, and then today just another 5% on huge buying volume. So again, this is one that is getting a little bit far from the base for me to buy now. I don't have a position, but man, historic run here. So let me switch back to this camera. Outside of stocks, one thing that I wanted to talk about was on Monday, and I think a little bit of Tuesday, Thinkorswim went down. And I saw on Twitter everyone complaining that they couldn't get their trades filled, they couldn't get out of positions that were crashing. If I remember right, Monday was a really good day, so for growth stocks especially. So people were trying to get into positions, but they didn't have a working platform to do so. I got stuck with the same exact thing a couple months earlier. I think it was March 1st, when I was trading options too, so it was even worse. I had puts on Tesla, and that was the day that they went up 13%. The market spiked one more time before, or it was in one of the spikes during the downtrend. But I was down $8,000 and I couldn't get out of it. So I vowed after that day, one, I would move a lot of my money out of Robinhood, but I would diversify my brokerage accounts. So I'd always have enough money in 3 different brokerages to always replace the trade that I couldn't get out of. And this is just another risk management move. It's just like setting a stop loss. You're gonna have days where technology doesn't work for you. If my internet's out, I have my phone. If my phone's dead, I better be near a computer. Other than that, I always have my stops set. So worst comes to worst, I get stopped out of all my trades. That's fine to me. That's a risk measure that you're in control of. So with that being said, if you're a trader with one brokerage account right now, it's time to diversify. So personally, I still have Robinhood. I have a little bit more long-term money in there that I keep just as like a savings account, get a little bit more interest than the bank. I have a Webull account. So if you don't have Webull, they have a great promotion. That's basically why I got into Webull. When you deposit $100, they give you 2 free stocks between $10 and $1,400. Every time that I have gotten stocks from them, it's been about $15 to $25. So if you are interested in Webull, there's a link in the description below. Use that link. You'll get 2 free stocks when you deposit $100, and I'll get 2 free stocks. So you'll be helping me out too. Outside of that, if you want to open up an E-Trade account, that's what I will always be sharing the charts with. So if you want to make your screen look like mine, you can open up an E-Trade account. Again, I have a link in the description for that. They have ranging values for how much money you deposit. So I think now it's you deposit $5,000, you get $25 back. It used to be $100. So if you find a better brokerage account that has a good starting deal and you're just opening that account to kind of diversify, do that. I like Robinhood, but do what's going to be best for you. That's something that I will always be honest about. If I'm getting stocks by promoting something, then I'll tell you guys. But in the end, I want you guys to be the best traders that you can be. And that's what this channel is about. So it's not about me making $10 on a stock. Let's jump back here. to the notes. Also, let me check on time. So we're already 19 minutes in. This is going pretty quick. All right. What else did I want to talk about? Okay, so let's jump into some earnings this week. It's getting to be the end of Q2 earnings, but there were a couple that I wanted to talk about. The first is JD.com. So one of actually my favorite trade setup is when a stock moves higher from a base. So this moved, we'll call it 55%, 50% from this base in May. And then it starts making smaller and smaller pullbacks. So from the peak here to the drop, that's 13%. From the peak here to the drop, that's 9%. From the peak here to the drop, 8%. So you're seeing less and less selling pressure after this move up. So the consolidation is getting tighter and tighter. You see volume squeezing, which you always want to see decreasing volume when you get a pullback from a move up, because you don't want large sellers. You don't want people taking their profits. You want strong holders that think the stock's going to keep running. So we saw that with JD, volume lightening up. Earnings is what popped it from the base, but it opened and then it retraced to exactly the 20-day simple moving average. So again, that's this green line right here. You can see the low of the day, the lower part of the candle here, hit that 20-day moving average, found support, and started bouncing up. This wasn't on my watch list until at the end of the day, and you could see it moved all the way up. And from the base, it's only 6% extended. I probably should have taken the trade, but I had my capital tied up already. But you can just see the powerful move here. So you got a lot of buyers on earnings day. That's always going to happen. It's what happens after earnings day that's going to tell you more about the stock. And man, look at this buying volume. It's large, and you can see just higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. The trend is up here. There's huge buying volume. Again, now it's too far from me to look at the stock, but if you're already in it, just keep running the trend, maybe trim a little bit as it's over this Bollinger Band, and then watch this rising 8-day exponential moving average for support. If it breaks below that, then you can start looking at the previous highs here for other support levels. But that was a trade setup that I wanted to talk about. The next one is Kohls. So Kohls here, I got long. I don't like to trade stocks that are under the 200-day simple moving average. That's more of a new rule for me. So I did have an exception with Kohls here, and it did work out. But I got in when it broke over this 8-day exponential moving average. I can zoom in here a little bit. So broke over with a volume increased day. So that's, again, something I'm always looking for. Increased volume on a day moving with higher highs and higher lows. When I say higher highs and higher lows, what I mean by that is the high of the current day is higher than the previous day's high, and the low of the low of today is higher than the previous day's low. So the trend is up. Got in here, started cutting my shares here because I didn't want to hold for earnings. It's under the 200-day simple moving average. Kohls is a retail shop. During a pandemic, I didn't think there was much upside, so I completely got out of the trade. That was great for me because it dropped 14% and continues to make lower lows and lower highs here, as this selling volume was just incredible. But one thing that I did want to call out was, as I was posting about this on Stock Twits, which is basically Twitter for stocks, if you haven't been there, you can find some good information there. There's a lot of random posting, but I enjoy it. I'm always on there. I do recaps every day there. But on Stock Twits, I was posting how I was getting out of Kohls before earnings, how you should always, if you're not in a winning position, reduce your position before earnings, because earnings is just a flip of the coin. You never know how it's going to go. So this one individual reached out to me, said thank you for talking to me about risk management. He dropped 1,000 of his shares just before earnings, and that saved him $3,000 to $4,000 depending on when he would have sold on this downtrend. So risk management is always something that I'm going to stress here. Making money is great, but keeping money is the most important part. All right, let's go target. We might run this a little bit late, but it was the intro one. So, all right, target, same thing. Beautiful setup, absolutely missed it on my part. Look at this, exactly what I was saying before. Higher high, moved up, let's see, let's retrace this. So moved up from the low point around 40%, and now we're starting this coil and we're getting less and less magnitude on the pullback. So 8.3 on the first one, 6.4 on the second one, 2.8 on the third one, and then if you just make a, if you just make a horizontal bar, can I put that here? Let's see, horizontal. If you just make that at the previous high, this is your buying zone right here. And look, you get high day, high day, high day, and then it breaks out here. Broke out, stayed above the 8-day exponential moving average. So now you have momentum, the trend's in your favor, buyers are coming in. The 2 red days we saw here, let me zoom into this, 2 red days, reduced volume. That means there's less sellers, there's still more buyers. Ran up all the way to earnings. Earnings gapped up. Again, earnings is always a flip of the coin. But what happens after earnings is important. And look at Target is holding that strength. So the day after earnings, moved down a couple percent, whatever. Look at the volume, about a third of that. And today, staying right around the same price with the volume subsiding. So Target still looks strong here if you're already in, but if you're not in yet, you missed this move. But take notes of what happened in the stock chart before that, so you can apply the same thing to the next stock. All right. Synopsys Inc. So this is one that I had tracked for a long time because it was exactly that same kind of setup. Moved off the base. Oops, I'm on horizontal, so I gotta change this to measure. All right. Moved off the base, 82%. Now we're seeing pullbacks of less and less magnitude through here, while volume shrinking. We got earnings similar to JD. So that's why I'm so excited. I did catch this move in after hours. I got in at $203, so right around here. The next day, it gapped up about, I want to say it was like 6%. Pulled back, shook out all the weak sellers. Some people were just taking profits on the tiny gap up. But it pulled back to the 8-day exponential moving average. Look at that. Bounced exactly off that point. And then moved up, closed the day up like 9%. And today was really telling for the strength that this stock holds, because look at this long lower wick on the candle. That means that sellers came here and immediately it got bought back up. And it closed only down 1%. The volume's a little bit higher on the second day than I would have liked, but it more so points to how many shares traded hands during this lower wick. So again, if there's buyers here and this pushed all the way up after this pop, I'm confident in this stock. I'm holding my initial position still, and I'm hoping for something like a JD with this one. Volume on this is about 1 million shares a day. So low volume, once more people find this stock, it can really start to run. So I like this one. And then finally, Nvidia. This was one that, similar to Kohls, I was profitable before earnings. Let's see, that's the wrong earnings date. Don't know why that's on there, but I bought on this higher high day with, again, increased volume here, always something that I look for. Stayed above the 8-day exponential moving average. Did dip down here, but I had my stop under the 20-day simple moving average. So you always want to set your stops. I do mine around 8% because I'm only investing about 6 to 15% of my portfolio in a position at a time. So I can give the stock about 8%, 8 to 10% of wiggle room for it to move normally before I want to get out of a trade. But pulled back here, I added on the day that it popped here with, again, higher volume, and when it made a higher high over the previous day's high after pulling back to the 8-day moving average. That's a sweet spot for me. A stock that's already in my favor and then starts pulling back, finds support at that 8-day, maybe sometimes the 20-day, and then makes another daily high the next day with volume, I'm buying, because that's showing me that there's some strength here. So I had about 12% of my portfolio in this going into earnings. I was up 10, 12% before earnings. At that point, I cut my position in half because, again, earnings are a coin flip. Always want to reduce risk when you can. I locked in 10% on half, moved my stop loss up to my entry point on the rest of the half. Earnings was flat. It completely killed anyone who was buying options. The sellers won that. And then, again, this is perfect. So we get earnings day, always has good volume. We get pullback to the 8-day exponential moving average. That holds. You see the low of the day holds right on that line. And Friday today, 4.5% up. We have huge buying volume. I love it. I'm still holding on to Nvidia. So I see in the chats Alibaba, who also had earnings. That's a good call. And actually, that's a great setup that right now I have my capital working for me, but this looks like a beautiful setup. So let me change this to like draw segment. There we go. So if we just draw this line, and so I always look for channels when I'm trading, and you can see moved up. Let me change this back to measure so we can check this out. Moved up to the top, up 25% from the low of the base here, and now we're moving down 11%, moving down 6%, a little bit higher drop here, probably, yeah, 6 to 7%. But they had their earnings, again, not a huge move on earnings, but today it did break out of this channel. We got good volume. The volume on earnings is always high though, not a great tell, but right now, Alibaba's looking like a buy. Again, this everything that I say is my personal opinion, so always do your due diligence. There's risk in trading stocks, but this looks like a great setup. This is something that I would take. All right, let's jump to YouTube to see how many we got. All right, Cisco. Ooh, Cisco's a good one. Another earnings date, and another one where I got out the day of earnings. I thought it would be a great setup because, again, it popped up from a base. I mean, everything did, but 47%, that's great. We're seeing coiling, had this huge volume day, and that's when I'm like, oh, there's something up with this stock. I should be getting in. So I bought an initial position on that high volume day, and for 2 months, it just moved sideways on me. I think I was up about 2% this entire time, and 2% going into earnings. You have no idea what's going on with earnings, so I stuck to my rules. Whatever trading rules you have, stick to them while your trade's live, and then move from there. So I got out the day before earnings, and of course, earnings, flip of the coin, dropped down. Let's see. So closed 11% down, is now starting to create a base. So you could put a trade on here where you put your stop loss just below this base here, maybe a little bit further down. And then, if it breaks that base, we're probably retracing even lower. But you could have a high, low risk, high reward trade here with the tight stop loss. Personally, I don't like to take trades under that 200-day simple moving average. I want, ideally, all the moving averages going in my favor. That usually sets things up really great for runs. Robles, what's on my watch list for next week? So let me jump to, where is this? All right, so sorry about this. So So one trade, two trades that, I'll talk about two trades that I just got into today or yesterday. So AMD is one of them. We saw that same coiling pattern after a little bit of run up, but this coiled for months. And you could see, I tried, this one kills me because I tried to buy while it was in the base here, pulled back, and when it broke below here, I got stopped out on my 8% rule. And what I should have done is still track the trade because, of course, it popped up on here. We got huge volume, moved up, went to earnings. But if I was in the trade already, I'm up 27%. I can play earnings at that point. Moves even higher, up 57%. I missed out on 57% of profit on a trade because after I got stopped out, I didn't keep tracking it. So you do want to always watch the trades that you get stopped out of, but you don't want to revenge trade. So what I mean by that is you shouldn't be getting into a trade to get your money back. AMD doesn't care about you. Apple doesn't care about you. You need to care about yourself and treat these tickers as what they are. They're just random letters to you. That's all they need to be. But yeah, missed out on the 57% move. That hurt, but now I'm watching it. Just like Tesla. This is setting up pretty similar to Tesla. Moved up here, dropped down. Look at that low volume drop compared to the buying volume we had. Shook out probably a lot of people as it moved down, but it never broke below this little base here. So dropped down below that 8-day exponential moving average. Probably shook out a lot of short-term investors. Would have shaken me out for sure. Moved back up, and now it's coiling in here. And this is where it got interesting for me. Dropped down to the 20-day simple moving average. It actually opened low. That's how the candles formed. It opened down here, found support there, and once it made a high over the previous day's high, I got in because I know the move with AMD. It has volatility to it. If it can show some strength here, this is going to be great. So I'm in it. I don't know why I set all my stops up to show. I don't know why it's, there we go. So this is where my stop is at, 77.52. It gives the trade a little bit of wiggle room here, but I'm not going to be risking too much money on the downside. But on the upside, this can push forward, make new highs. Again, watch this, and then if I switch to Tesla, similar thing, breakout, consolidation, consolidation, pop. So that's what I'm going for. And the other trade that I wanted to talk about was, where is it? TMO, Thermo Fischer Scientific Inc. So this is another good example of we moved up from the base. We had a small pullback, 4%, a little bit larger, I don't know, 4.8%, but volume lightening up. And then if I place that kind of lid to the move here, where is horizontal? If I place that lid right at the last high point, we clearly see a breakout from here. It's at all-time highs now. And if I switch 5-day for some reason, yeah, I don't know why it's not showing, but I'll keep a stop at around 6% here, a little bit under the 20-day simple moving average. That'll do fine for me, but really looking for this to break out. All right, with that, let's see. What are some other stocks you guys are looking at, or what do you want me to review? This is the first live stream that I've done, so if there are any improvements that you'd like to see me make, comment them below. I'll read each of them and make those improvements. Let's see, anything else? Oh, yeah, OSTK. Overstock was one stock that I wanted to talk about, and then we'll wrap up the week with that. So if you're not familiar with this, it has jumped nope, not horizontal. It's jumped 10,338% from the low. And I have missed the entire move. So I just started watching this maybe a month ago, but again, it's already overextended from the base here. So I'm not trying to make moves when it's overextended from the base. There's plenty of setups out there. If there aren't setups that day, there's going to be so many days to trade. So don't worry about that. Found this, pulled back to the 8-day exponential moving average, and this is when I got interested in it. Once it made a high over the previous day, I bought my position here. The next day it pulled back down. I almost got shaken out, but my stop was below that 8-day exponential moving average. So saved the trade there. And of course, on Monday, this was up 25%. I started cutting my positions there. I like to take about 10% of the position out every time it makes a multiple of my average gain. So right now my average gain's about 8.5%. So every time a stock goes 8.5% above my entry point, I'll take 10% out, just book those profits. Because I'm always trying to book profits, limit risk on the downside. So right now I have about a quarter of my original position left. This is starting to consolidate here, maybe starting to make a new base. We'll see how the stock moves when the 8-day exponential moving average comes back up to it. Yeah, all e-commerce is killing it. Shopify is starting to move up on that trend. Didn't really pop the way that I thought it would this week, so no position there. Let's see. Any other questions you guys have? Probably cut the stream in a little bit here, but yeah, so if you enjoyed what I talked about today, please leave a like on the video. It helps with the YouTube algorithm to promote the video to other groups, other people that might be interested. Let me switch back here. Please subscribe. I'll be doing these every Friday where I go through the trades I made, any mistakes that I made on the stocks, what's on my watch list. I'll always cover that. And let's see, what else? Yeah, I'm on Twitter, so I'm at StockTrickNick, not Stock Tricks with Nick, StockTrickNick. So give me a follow there. I usually post only the stocks that I'm getting into or getting out of there. But if you're looking for a bunch of my own opinions, StockTwits is a great place to follow me. I'm at Stock Tricks with Nick there. And like I said earlier in the stream, every day around 5 or 6, depending on when I get off work, I go through my list of 60, 70 stocks, and we'll comment on any of the moves there. So please follow me there, and I think that is where we might leave this. So again, share this with anyone that's new to trading, anyone who's looking to improve their risk management. Other people will definitely make more money than I do, but it's about keeping the money. And that's why I got out of the options trading. Options trading is a great way to make a lot of money, but if you're not diligent and watching the stock constantly, it's really, really hard to keep your money. So with trading actual stocks, I set all my trades up before the workday. I might check the stocks at noon or something, just around lunchtime, and at the end of the day. Other than that, I'm trying to give myself distance away from watching the screen so I don't make any emotional judgment decisions. I want the math to work out for me. All right, with that said, I'm gonna cut the stream here, but this is gonna be posted on my channel. Again, please leave a like, comment on anything that I can do to improve this stream for next week, and I'll see you next week. Have a great weekend.